Dividend stocks attract many different types of investors. Those who are looking for passive income, those who are looking for blue chip companies, and those who are looking for some growth stocks that have a lot of stability behind them. In this video, I want to discuss 5 different stocks in 5 different sectors that I believe provide any investor good exposure to the stock market in terms of stability, growth, and future potential, as well as providing them good diversification for their portfolio. So this is going to be a very exciting video, and I know that you guys love dividend videos, but all I ask you is if you do enjoy this, drop a like down below to show your support, and also let me know what 5 dividend stocks you would hold forever. So the stocks I've chosen here and kind of handpicked all have extremely good track records of paying out dividends regardless of economic times, regardless of other struggles out there. They just keep plowing through and not only paying those dividends, but also raise them consistently. As an added bonus, these companies have also grown immensely over time, rewarding shareholders with capital appreciation as well. So these are incredible businesses that I want to discuss with you guys. So sit back, relax, let's go through this list here and let me know your thoughts in the comments below. The first stock here that we have is McDonald's. McDonald's is a company that everyone's heard of and many have grown up with as a child as well. So the brand itself holds a very special place in most of our lives. The interesting thing about this company from an investment perspective, however, is that it is a company that is not only in the restaurant space, but they are also in the real estate space. They have been shifting their model over the last few years as they found success in just owning the real estate property and letting franchises operate the stores. This is the reason if you look at McDonald's revenue numbers over the years, it has been declining, but on the flip side, this allows them to become much more efficient and much more profitable. They also own a lot of prime real estate all over the world in major cities, so you're kind of getting a 2-in-1 here when it comes to McDonald's. As it stands when recording this video, the company has a starting yield of 2.72%, a 5-year growth rate of the dividend of 7.6%, and a track record of 43 years of consecutive growth. You may notice though that the payout ratio is currently out of whack, and this is a temporary issue in my opinion as we go through the global issue and restaurants like McDonald's get hit badly in the short term. Now, does this mean that McDonald's will cut their dividend? Highly unlikely, and in due time things will normalize again for the business and they will soon become a dividend king. Currently, the dividend yield for McDonald's is looking at about average here, almost in line with their average of around 2.5%. So it isn't an excellent value today, but it's still a great yield for McDonald's. In general, if you can get a starting yield in the high 2% or even in the 3% if you're lucky, you're getting a bargain on McDonald's stock. Looking at their dividend growth history, the company has really picked up steam in the last 20 years or so, and investors have taken notice of this. Although their 5-year compounded annual growth rate for the dividend is at 7.6%, their most recent dividend hike was a whopping 12.89%. This came as a huge surprise for investors and further strengthens McDonald's position in my top 5 dividend stocks to buy and hold forever. McDonald's is my favorite stock in the restaurant space, followed closely by Starbucks, but I have to give the edge here to McDonald's because of their history as a company and their history as a dividend growth company. Our second stock here, Microsoft, is one that may surprise a lot of you because you don't typically look at tech stocks in general when you think of dividends, let alone Microsoft. That being said, although Microsoft is a growth monster now with their Azure cloud business and other software products like Office 365 and Windows, they're surprisingly very good at dividends as well. They are in such a strong financial position. You will not only benefit here from massive capital gains, but also from dividends in this company as they're focused on growing this and rewarding shareholders. If you didn't already know, Microsoft is the largest company in the world as of recording this video, with well over $1 trillion in market cap. So Microsoft does have a smaller starting yield here of only 1.24%, which may seem at first glance too small to consider as a dividend company. But when we look at its 5-year compounded annual growth rate, which is 10.45%, things start to look a bit more exciting. We'll look more into this in a minute, but let's also acknowledge that this company has been extremely diligent with their payouts and has a low payout ratio of 36%, and they have been growing this dividend for 16 years consecutively. And funny enough, this is the only company on my list here which is not a dividend aristocrat yet. Now, looking at their historical dividend yield, it's hard to make a case solely on this that Microsoft is an attractive valuation. However, I would argue that it is, and the reason this yield is so low compared to where it is historically is because the stock price is growing faster than they are able to keep raising the dividend by. Investors see huge potential in the company, even at its current size, and as a result, Microsoft is one of those stocks that just does not stop going up. If we see Microsoft correct more, and you can get a starting yield of over 2% or higher, that would be an extremely rare occurrence, and I wouldn't want to miss out personally. Here we can see the dividend growth of the company, and you'll notice that they've been increasing their payout quite aggressively in the last few years. And this is because the business has been getting incredibly profitable recently, and they don't know what else to do with their cash. As a shareholder, you've been benefiting from this in both massive capital appreciation and also in dividend growth from a solid blue chip tech company. Microsoft is actually one of these hidden gems here that a lot of dividend investors don't really consider because of the low starting yield, but I believe this company is going to have one of the best track records, especially for a tech stock, when it comes to dividends, raising dividends, growing dividends. And if you're questioning if Microsoft is a good investment, just remember that this is the largest company in the world for a good reason. Johnson & Johnson, our third pick here, is a classic whenever discussing dividends, as its history as a dividend growth company is stellar. They are like the gold standard when companies think of paying out a dividend, and their balance sheet allows them to keep growing every single year without fail. The growth with Johnson & Johnson is slow and steady, but what you get here is stability and reliability, and not many companies out there can say they're a dividend king, but Johnson & Johnson can. The current starting yield for J&J is 2.69%, which is not too bad at all for this incredible company. And they've been growing their dividend consecutively for 57 years straight. The last 5 years saw a compounded annual growth rate of 6.32%, and the payout ratio is still very low at 46%, showing how sustainable this dividend is and how Johnson & Johnson is well on its way to growing their dividend for the foreseeable future. Now, I do believe that Johnson & Johnson just recently came out with their earnings and raised their dividend by another 6% or so as well, so this kind of keeps up with the current trend. Generally, I would say if you're getting a starting yield in the high 2%, it's a good value for the stock, and if it's above 3%, it's a steal. Currently, I would say we're kind of at a fair starting yield historically for J&J, and for a company of this track record, this is more than good enough for me. The dividend growth history for this company is just something else, like I said, 57 years straight, and on average you can probably expect a 6% raise year over year in your dividends. It's hard to find companies in such a strong financial situation to sustain and grow such a large dividend like this, but Johnson & Johnson shows us year after year that they cannot and will not be stopped. Johnson & Johnson is one of the best run companies in the world, there's no doubt about that, there's no arguing that. And there's a reason why this company has been able to sustain and grow its dividend consecutively for more than 50 years. What this company also allows you to do is gives you exposure to the healthcare space, and because of these reasons, I really want to include Johnson & Johnson in my top 5 dividend stocks to own forever. Now, coming in at number 4 is another monster here with their dividends, and that's 3M. And I would say this is probably the most controversial stock on this list, as some investors don't feel this company has a sustainable balance sheet. My opinion is that 3M may continue to struggle in the short term, but over the long term, this will continue to be another behemoth worldwide. Oh, did I also mention that this company is another dividend king? That's right, not only is 3M a dividend king as well, but it also takes the title here of the longest running dividend increase streak on my list today, coming in at 61 consecutive years of growth. The starting yield is an impressive 3.98%, the 5-year compounded annual growth rate is 10.99%, and the payout, although it's high right now, is still relatively safe at 69%. 3M is a cyclical company, and during tougher economic times, they get hit harder than other companies, but they have proven time and time again that they can weather through the storm. I have no reason to believe here that this time will be any different for this company, and unlike the other 3 companies we've talked about so far, 3M is actually still a screaming value at its current price. Usually the stock has a starting yield of around 2 to 2.5%, but currently you're getting it at almost double that at nearly 4%. You can see we haven't traded at this sort of value in recent times with 3M, and at current prices, you're getting an incredible business with a strong track record of raising their dividends at very attractive valuations. The growth history shows here that we have been slowing down recently, understandably so, with the last dividend increase coming in at 5.88%. This is because, like I said, 3M is a cyclical stock, and in tougher economic times, the company focuses more on maintaining its growth and business. So what they do is they typically slow down their dividend increases. But once things pick back up, they will start to grow rapidly once again and get back to those double-digit dividend hikes year after year. Nonetheless, 3M is one of my favorite stocks right now and is a stock that was showing value well before the market corrected in March. And like I said, what I find appealing about this company right now is that it's still trading at such an attractive valuation with such a high starting yield as well. So it's really hard to pass up this opportunity here in 3M and not include it in my top 5 list. Rounding out our top 5 here, our 5th stock is Pepsi. And this is another company that's one of my favorites. Many investors have a hard time deciding between Pepsi and Coke, but to me, the answer is kind of a no-brainer as Pepsi has a strong drinks and snacks division. I feel that the company has a lot better diversified portfolio with their products, and that's the reason I choose to go with them over Coca-Cola. That's not to say that Coke isn't a good dividend stock as well, but just for me personally and my investing style, Pepsi takes the cake. Now, Pepsi is another company with a strong track record of dividends and is currently offering a starting yield of 2.86%. The 5-year compounded annual growth rate is sitting at 8.41%, which is very respectable, and the growth history is almost that of a dividend king, just 3 more years until it gets there. Now, the payout is a bit higher than I'd like at 66%, but this is a company that focuses on paying dividends. It's not one of your high growth companies. So for these type of companies, a payout even in this range is sustainable, as they are essentially companies that will do well in almost any economic condition because people gotta eat. So Pepsi doesn't really divert from its average yield very often, but recently we saw some good value very briefly. If you can have this company with a starting yield in the high 2%, or if you're lucky, above 3%, it's an absolute bargain because, like I said, it's a relatively stable stock and it doesn't go on sale all that often. On average with Pepsi, you're getting around an 8% yield, but over the last year, they had raised it by 5.71%, which is lower than usual. The company, however, is working on some acquisitions, so they are most likely turning to preserve cash to fund those deals in the short term. Over the longer term, though, I believe that around an 8% raise year over year on the dividends would be acceptable and is what I would expect as a shareholder of this stock. Again, Coca-Cola may be a better option here for some, but in my opinion, comparing these two companies, I think that over the long term, at this point on, Pepsi is going to be the better performer. They are going to have better dividend growth and capital appreciation growth, which is why I chose to include this company in my top 5 list versus Coca-Cola. So that rounds out my top 5 dividend stocks to buy and hold forever. And guys, these are companies that I absolutely love and will stand behind no matter what the economic conditions are. Let me know in the comment section down below what dividend stocks you would buy and hold forever. I'd love to hear your thoughts. Let me know if you agree with my 5 picks. And of course, as always, I know that not everyone's going to be a dividend investor. And as always, not everyone is going to agree with this video because maybe you're not a dividend investor. But just keep an open mind here because these companies not only offer dividend growth over the next few years, but they also offer a lot of capital appreciation, in my opinion, over the next few years. Guys, thank you so much for watching. Hope you enjoyed this video. Hope you found some value in it, but either way, don't forget to invest positively, and I'll see you in the next one. Peace.